We all know that the main purpose of life insurance is to provide a death benefit to protect your family or business after you are gone. Today, however, I want to talk to you about a key to life insurance, the living benefits. The death benefit that life insurance provides can help protect what your clients care about most if they were to pass away. Beyond the emotional devastation, the loss of a family's primary income earner can be financially devastating as well. But what if a similar financial devastation were to occur while the primary income earner was still alive? A serious illness can be financially devastating without the availability of an influx of cash created by the death benefit. There are many recent studies that show the impact of a serious illness and how these dangers may affect us in the future. But what are the chances of experiencing one of these severe and possibly financially devastating illnesses? Will the life insurance policy from National Life Insurance Company or the Life Insurance Company of the Southwest, even if your clients are not receiving a death benefit, they may qualify to receive a living benefit. Living benefits are provided through our Accelerated Benefit Riders, or ABRs. Let's take a closer look at the Accelerated Benefit Riders. The Accelerated Benefit Riders allow the policyholder to access the death benefit with a qualifying illness during their lifetime in the event the insured incurs a terminal, chronic, or critical illness. The ABR benefits are not limited to unreimbursed expenses and generally can be used for anything. The policy owner has full discretion on how the benefits are used. Benefits can be used for such expenses as quality of life expenditures, medical procedures, experimental treatments, or even reimbursing a family member for their assistance. Limitations do apply in Massachusetts. You should check the ABR agent guide for specific state and product specials for each rider, as well as the annual and lifetime maximums that may apply for each rider. There is no additional premium required for these riders. Instead, the policyholder is accelerating their death benefit on a discounted basis. Payment of accelerated benefits will reduce the cash value and death benefit, may be a taxable event, and may affect eligibility for public assistance programs. We'll talk more about how the discount is calculated shortly. In the meantime, let's take a closer look at each of the riders. In order to qualify for a terminal illness, the insured must be diagnosed with a terminal illness, and the condition must be expected to result in death within 24 months. The definition of life expectancy to qualify for the terminal illness rider is 12 months in several states. Refer to the web for state specials. The client can accelerate all or a portion of the discounted death benefit, and the benefit is received in a lump sum. As stated earlier, once the insured qualifies, benefits can be used for anything. Note that the terminal illness 24-month life expectancy is very liberal. Most other companies require 12 months. Let's take a look at what a terminal illness benefit might look like. Assume our client is a male, age 45, standard, non-tobacco. His policy has a $500,000 death benefit and a $9,174 premium. If he were to accelerate his policy and receive his benefit at age 65, he could expect a benefit of $431,629. Let's take a look at the next ABR, chronic. To qualify for the chronic illness benefit, a licensed healthcare practitioner must certify that within the last 12 months, the insured for a period of 90 consecutive days could not perform 2 out of 6 activities of daily living or required substantial supervision to protect themselves from threats to safety and safety due to severe cognitive impairment. There is a limitation. No acceleration permitted under ABR2 for the first 2 years that the rider is in effect. Competition note: chronic illness benefit is not offered by many companies. To qualify for chronic illness, your client needs to be unable to perform 2 of the 6 ADLs, which are bathing, continence, dressing, eating, toileting, and transferring. Or they may also qualify if they are found to be cognitively impaired. Let's take a look at a chronic benefit if it is accelerated on a monthly basis. Assume our client is the exact same person as before If accelerating his chronic ABR at age 65, he can receive a $7,338 monthly benefit. Same scenario, but instead he wants to accelerate the full policy and receive a lump sum benefit. He could expect to receive a benefit payment of $366,922. Note that lump sum would not be available in Massachusetts. The third ABR is for critical illness. To qualify for critical illness, the insured must have or have had one of the following conditions: heart attack, stroke, cancer, end-stage renal failure, major organ transplant, ALS, or blindness. There is also a limitation period. No acceleration is permitted for the first 30 days that the rider is in effect. Critical illness is underwritten at the time the rider is requested. If the policy has a rating, the rider will not be available. Competition note: critical illness is a very uncommon rider in our markets. Let's look at an example of someone accelerating their critical illness ABR. Assume the same person, but this time he's accelerating the critical illness instead. This does not mean that he has accelerated terminal, chronic, and critical. Once a policy is fully accelerated by any of the ABRs, it is terminated. If he were to accelerate his policy at age 65, he could expect a $409,469 benefit. This is assuming he was classified as a Category 4 or life-threatening. If he was classified as a lower category, the benefit would be smaller. Now let's take a minute to answer some common questions about ABRs. First, how can we offer these benefits at no additional cost? The answer is we don't charge an extra premium for the rider. Instead, the death benefit is discounted when determining what will be paid in accelerating the benefits. Second, how are benefits calculated? The answer is, think of it as the present value of the future death benefit. What does that mean? What is the present value? The present value concept is what is used to figure out the discounted value of the ABR benefit payout. I'll take a minute to explain what the present value concept is. Basically, it's how you figure out what a value today is worth in 20 years or vice versa. So how is the discounted value determined? First, you take the present value of future premiums. As age increases, the likelihood of receiving premiums goes down. The value to the company is less. If something is worth $100,000 in 20 years, what is it worth today? The answer is it depends on the interest rate you assume. Let's assume 4% in this example. It would be worth $45,638. Once you have figured out the present value of the future premiums, you need the present value of the death benefit. So why does it go up over time? As the insured ages, the chance the insured will live goes down, adjusting for mortality. The older you are, the higher the chance we will pay it out, and the greater the value. Now let's talk about the underwriting of ABRs. Underwriting happens at the time the policy is being underwritten and is not a separate process. Any table rating, including temporary flat extras, will make the critical illness ABR not available. If your client has a term policy with ABRs and is converting to a permanent policy, there is no contractual right saying that the company will convert the ABRs as well. The company's current practice is to convert the ABRs, but it is up to the discretion of the company. For survivorship policies, the ABRs are not originally added to the policy. They are available after the first death and will be underwritten at the time they are added. Let's go over how to submit an ABR claim. To submit a claim, send an email to the claims department. Provide the name of the insured, the policy number, the nature of the illness or injury of the insured, the onset date of the illness or injury, and advise the ABR rider that they are requesting information on, whether it's terminal, chronic, or critical. Not all products offer all three ABRs, so check rider availability for each product you are considering. For survivorship policies, the ABRs are not available until after the first death. Not all ABRs are approved in all states, and some states have different provisions, i.e. 12 months versus 24 months on terminal illness. As noted earlier, if the policy is rated, critical illness will not be available. Whether your client is concerned about dying too soon, becoming ill, or living too long, we have products and riders that may be a solution to their concerns. For more information, visit NL Group U on the web or call the National Life Group Sales Desk at 1-800-906-3310.